Good day and welcome to the Jindal Drilling and Industries Limited Q2 FY2024 earnings conference call hosted by Phillip Capital India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that the conference is being recorded. I now hand the conference over to Mr. Vikas Singh from Phillip Capital India Private Limited. Thank you and over to you, sir.
Good afternoon, everyone. Welcome to all of you on Jindal Drilling Industries' first ever Concall. Today we have with us from the management side Mr. Raghav Jindal, MD, and Mr. Kaushal Bengani, DGM, Investor Relations and Finance. Without taking any much time, I would hand over the call to Mr. Kaushal for the opening remark. Over to you, sir.
Thank you, Vikas. Good afternoon, shareholders, and thank you for joining us on our earnings call. This is the first earnings call that we have conducted in the recent past. We are extremely excited for the future and wanted to communicate to our shareholders the various updates and changes which we have done in Jindal Drilling and Industries. We have improved our operations and that has reflected in our numbers. Our performance has improved substantially and we strongly believe that we will perform even better in the second half of FY24 and in FY25. I will briefly summarize the key financial indicators. In Q2 FY24, our revenue increased by 51% compared to our performance in Q1 FY24. Our EBITDA increased by 26%. The profit after tax and earnings per share increased by 55%. This is on account of deployment of 3 rigs in the current financial year: Discovery 1, Jindal Star, and Virtue 1. These 3 rigs have started their new ONGC contracts at rates significantly higher than the previous contract. This has been the key reason for our improved performance. Another feather in our cap which has been achieved in the past week was the deployment of rig Virtue 1 with ONGC. Consequent to this deployment, Jindal Drilling has become the largest Indian offshore drilling services contractor with ONGC. We operate 5 offshore jackup rigs with them and our efficiency in operations is in excess of 98%. I would now like to take you through our earnings presentation. The first slide talks about Jindal Drilling and Industries. We are, as mentioned earlier, the leading offshore drilling services contractor in India's oil and gas sector. We have more than 35 years of experience in the sector of offshore drilling. We are supported by an efficient and experienced operational and management team who ensure that our efficiency is not compromised and we achieve highest levels of safety. We have been supporting ONGC for the past 30 years and it is an indication of the level of customer satisfaction that we are able to command from them. Apart from 5 offshore jackup rigs that we run with ONGC, we also operate 10 mud logging units, 9 with ONGC and 1 with Megha Engineering. We also provide directional drilling services to the oil and gas sector. The next slide talks about the rigs which are deployed with ONGC. All rigs are on long-term contracts. On perusing this slide, you will note that there is a significant difference in the day rates of Virtue 1 versus the day rates of other rigs. This is because the tender for Virtue 1 was issued after the onset of the Russia-Ukraine war. And that is the reason why the rate of 80,633 higher than the other rates, which are in the range of $40,000 to $50,000 per day. One of our other rigs, Jindal Supreme, will be dehired in the later part of FY24, and we expect the new contract rates to be higher than the existing rate. The rig segment of Jindal Drilling and Industries accounts for 90% of the EBITDA which is generated, and that is the area of growth for Jindal Drilling in future. The next slide details the revenue and EBITDA, PAT and EPS. We have fantastic EBITDA margins and we will maintain the same going forward. The PAT margin has also been consistent despite a turbulent period over the past year, and we've been able to generate such strong PAT margins by controlling costs despite inflationary pressures. Our marketing team has also ensured that we are able to secure tenders at good rates. The profit and loss account is detailed on the next slide, and our profitability has improved quarter on quarter. The annual highlights indicate an upward trend in the performance of Jindal Drilling, and we strongly believe that this performance will be replicated going forward, and we are excited in achieving that. As I was talking about the EBITDA mix earlier, that the rig segment accounts for more than 90% of the total EBITDA generated. This slide spells it out in more detail on quarter-on-quarter basis. The borrowings of Jindal Drilling is currently at 192 crores. This has slightly increased on account of refurbishment activities of 3 rigs in the current calendar year. As all 5 rigs are now deployed at higher rates with ONGC, our debt will reduce rapidly over the next 12 months. Our shareholding structure comprises few marquee investors, and we hope that going forward we will also be considered favorably by similar investors and institutions. I would now like to hand over the floor back to Vikas so that we can take questions.
Operator,
yes, sir.
You can announce for the Q&A session.
Okay. Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to only use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Nilesh Doshi from Green Lantern Capital. Please go ahead.
Yeah, thank you for taking question. Kaushal, one point just to understand is Virtue 1 you have mentioned in the presentation it is rented, but I believe you have passed a board resolution to acquire this rig. Can you elaborate on that, please?
Thank you. Yes, sir, you're right. We've been considering purchase of rig Virtue 1. We are in the process of obtaining legal opinion for the said purchase. Once that opinion is received, and if that opinion gives us a clear go-ahead, we will purchase rig Virtue 1. Currently, we own Discovery 1 and Jindal Supreme, and we want to increase our fleet of rigs in the books of Jindal Drilling. And for that reason, we had approached shareholders for approval of the said purchase. That approval was received a few months ago. However, we are still in the process of obtaining the legal opinion. Once that is received, we can go ahead with the purchase of this rig.
Now, when you say these are rented, I believe Jindal Drilling owns some percentage into each of these, right? That is in Virtue 1 and Jindal, Virtue 1, correct? So
yes,
that's a 49% owned.
So Virtue 1 is owned by Virtue Drilling Pte Limited, which is based in Singapore. It is a joint venture company of Jindal Drilling, and Jindal Drilling owns 49% of Virtue Drilling Pte Limited.
Okay. Second is, what is the current rate going on, because your Jindal Star, I think, Jindal Supreme is coming for renewal next year.
Rates are good. We would not like to specify a rate as the tender is still under process. However, market is good, rates are good.
Okay. Third is, you never mentioned anything about the other rig which you're operating in the Mexican water.
There is another joint venture company in Singapore, Discovery Drilling Pte Limited, which is also 49% owned by Jindal Drilling. That entity owns a rig called Jindal Pioneer. Rig Jindal Pioneer is deployed with Sai Mexicana in Mexico. We were focusing on standalone operations of Jindal Drilling, which is why that was not covered in this presentation.
Okay. And the last question is to Mr. Raghav. Can you explain or help us understand what's happening in the drilling area globally, and how do you see for the next couple of years the opportunity, because the geopolitical scenario and the volatility is very high in the region, and on the other side, ESG and carbon neutrality is hurting the oil industry. So can you please help us understand how do you see the future?
Good afternoon. So, the future is very bright. There is a lot of shortage of rigs in the market internationally and in India. India has grown its fleet of rigs since last year by 33%. And yet, in the last 2-3 contracts, we've seen that it is short of the kind of rigs that it wants. So, the Indian market as well as the international market is going up, and we are looking at better rates in the coming future, including the tender for Jindal Supreme that we were talking about. And so the demand is there, and talking about the volatility in the market, the war has basically strengthened the market. The oil prices have become higher, and because of that, rig rates that we command would become higher. There is a shortage internationally. No new rigs are being made currently, but if things go the same way, we look at newer rigs being built in the market. So more of the old rigs would be given away and new rigs would be made. So increasing the demand of rigs increases our prices.
Kaushal, if you permit me, last question. Last year you had another income of 18 crore, and if I recall, this was more of a foreign exchange mark-to-market gain. So, and current quarter it is 8 crore. So can you explain what is the change, and this other income of 8 crore? Is it again a foreign exchange mark-to-market, or it is some other interest income?
The 18 crores, which was the other income in the previous year, was mostly on account of forex fluctuation. When the dollar moved from 70 rupees to 80 rupees, the exposure which Jindal Drilling has in dollar terms, that exposure was revalued, and it was a mark-to-market gain. In the current quarter, the movement in the dollar was not significant. Therefore, there was not any significant forex fluctuation. This income was primarily interest income on the loan denominated in dollar, which has been given to the joint venture companies. discovery drilling and virtue drilling.
So this is what we expect to continue quarter on quarter?
Yes, provided there is no forex fluctuation.
Okay. Yeah. Thank you, Kaushal. Thanks for taking my question.
Thank you.
Thank you. The next question is from the line of Aditya Sen from Robo Capital. Please go ahead.
Hi, thank you for the opportunity. So given that the market suggests that there's a scarcity of this down supply and demand is high from the ONGC front, the rates are also around $1 lakh a day. So if Supreme gets a contract at such rate, so would it be fair to say that we can do roughly 900 crores of revenue in the following year with around 50-55% EBITDA margin?
Good afternoon, Aditya. We can't really comment anything on the rates of Jindal Supreme currently. So we can't really assume anything further on this. We are under negotiations with ONGC and hope to get the best that we can.
All right. And in a recent interview, you talked about a new rig acquisition given that there's a demand-supply mismatch. So do we have any updates here? How much will be the amount? Until when shall we expect it? And the funding on this?
I'll just touch upon the point which MD sir made. So we cannot comment on the rate of Jindal Supreme at this point because the same is under negotiation. However, in the next financial year, we will have full year operations of the other rigs. In the current financial year, we've only had operations of one rig for 5 months and other 2 rigs for 7 and 9 months instead of 12 months for each of the rigs. So, because in next financial year there will be operations for entire 12 months of all of our rigs except for Jindal Supreme, we expect revenue to go up from current financial year.
I am asking about the new rig acquisition that we were talking about.
For the new rig acquisition, we have identified 1 or 2 rigs. We have to wait for ONGC to take out the next tender, and based on their requirements, we will be seeing whether the rig would be suitable or not. And so we are in talks and we've identified older rigs. We are not looking at constructing any new rigs for the moment.
Older rigs. So any ballpark number of the capex that we need to do the acquisition?
Nothing as of now, because acquiring a rig is one thing and then refurbishing it to the requirement of ONGC would be the second thing. So it all depends upon the tender requirements.
Right. So this is not a bareboat charter, right?
No, it won't be a bareboat charter. It would be a purchase if it would be.
All right. And since the rates on virtue have been revised, so do the bareboat charter rate and the expenditure rate also get revised in a similar proportion? How does it work?
No, I mean it really depends upon many factors. So can't really comment on that.
All right. And about Pioneer, can you share at what rate is Pioneer being contracted at?
So Pioneer has a time-based charter, so it increases every few months. It's about 30,000 bareboat charter rates currently, but it will increase eventually.
And we consolidate its revenue on our balance sheet, on our P&L, right?
The revenue is not consolidated. The profit of the joint venture is consolidated.
Achha, profit directly. Okay. Yeah, joint venture. Sorry.
Because it's a joint venture. And it's a bareboat charter, so just for clarity, we incur no expenses. The amount of 30,000 is the net amount receivable for us because it's a bareboat charter.
Yeah, understood. And last question. Do we have any cost sharing with the intercompanies? Like Jindal Explorer is with Maharashtra Seamless, right? So do we have any cost sharing structure with them?
Jindal Explorer is owned by Maharashtra Seamless. Maharashtra Seamless has given it on rent to Jindal Drilling. Jindal Drilling has given it on rent to ONGC. And
do we pay any what is the rent rate that we pay to Maharashtra Seamless?
We pay $23,000 per day to Maharashtra Seamless.
All right. That was fruitful. Thank you.
For Jindal Explorer.
Okay, thank you.
Thank you.
Thank you. The next question is from the line of Jeetu Punjabi from EM Capital Advisors. Please go ahead.
Hi. First, thank you so much for doing this analyst call. It kind of helps us understand what you're thinking and brings out good interaction between management and investors. So thank you for that. Two, I heard a lot of commentary in the last few questions around what you guys are thinking in terms of tactically about rigs that you're probably going to buy some refurb rigs and then refurb it and give it to ONGC, etc. Can I, however, love to hear what the management is thinking on what's its 2, 3, 4 year vision, what's the goal, what are you trying to do, and if you're going to, buy 1 or 2, 3 or 3 or 4 rigs over the next 3, 4 years, then what's the thinking, what's the leverage you're okay with, and how are you going to financially put that to work, and what would be the implications in terms of financials? So I'm not kind of asking for a commitment or a guidance. All I'm trying to understand is what is the broader thinking of the management and what you're trying to achieve over the next 3, 4 years.
Good afternoon, Jeetu. So basically, we want to increase our rig count according to the requirements by ONGC. We are only looking at ONGC to increase the market. We're not looking any other international markets to get into. So whatever the requirements there would be, which is not met by our current fleet, we would try and increase the footprint there. So it will only depend upon what the requirements are and what the rig availability is for us. So it's basically that.
And in terms of where do you think you'd add 2 or 3 rigs to this current thing over the next 3, 4 years? Is that a fair way to think about it? That if you think the market's right and the prices are right, that would be where you would get to?
So, it's really about the availability of rigs. There are very few rigs in the world that would match the ONGC requirements. Some of them are very old. Some of them have not been in contract for more than 3 years. So it makes it non-contractable for ONGC. So there are a lot of issues. So it will really depend upon if ONGC relaxes their requirements in the tender and whether that rig is suitable or not. So we would love to increase it by 2 to 3 rigs a year, depending on the contracts that ONGC comes out with, the tenders. But it really depends upon what is available, what is contracted, what the terms of the tenders are.
Okay. And the other question is, are you, in your opening comments, you said that you're going to work towards getting your leverage down very quickly because cash flow is going to be strong. Is that not factoring in the assumption that there's going to be potentially a new rig coming in, and if that comes, then your level goes up again? Is that a fair way to look at it?
Correct, yes.
Okay.
That is not factored with a new acquisition right now.
Okay. And then the other question is, when I look at your margins, and then I saw your last contracted rig, what it points to that if the pricing is where it is, then your margin should go up over the next 12 months. Is that a fair assumption to build in? Or are there costs going up in commensurate to that?
Correct.
So margins will head up. Okay.
Definitely. I mean, Jindal Supreme is currently working at 40,000 something. The new rates would definitely be substantially higher.
Okay. And then last question for me. I'm just saying, think 5 years out. What's the vision of the management? Like you're young. What's the bigger goal that you want to achieve over the next 5, 7 years? Say 2030.
So definitely there is a lot of volatility in this market, and We would like to be, we are one of the biggest players in India. We are looking at increasing the fleet. We are looking and speaking to people in India and internationally to acquire a few more rigs and a few more businesses in the same sector. So that's our vision and that's our goal for the next 5 years.
Okay. Thank you so much. Thank you, Raghav. Thank you, Kaushal. Appreciate the interaction.
Thanks.
Thanks.
Thank you. The next question is from the line of Shivan Sarvaiya from Hume Viction Investment Advisors. Please go ahead.
Hello.
Yes,
Hello.
sir. Please.
Am I audible? Yeah. Hi. A few questions from my end. One is on the operational status of the rigs in Q2. If you could throw some light, were all 5 rigs operational for the entire quarter?
No. Out of the 5 rigs, Jindal Star was deployed on 10th of July and Virtue was deployed in the last week of October. So, out of the 5 rigs, 3 rigs were operational for the entire quarter from July to September. 1 rig was operational from 10th July onwards and 1 rig was not operational in the second quarter. It became operational in the last week of October.
Okay. So, Virtue, which went on a charter in October, when was when did it come off contract previously?
It came off contract in end of December, beginning of January.
Okay, got it. And in terms of our contracts with our JVs, how is the rig hire charges determined, and how are the operating costs bifurcated between the JV and Jindal Drilling? If you could give a broad understanding here.
Yes, I'll do that in a moment. The de-hire date of Virtue was not correct. I beg your pardon. The rig was de-hired in the first week of April.
Okay, got it. Okay. Yeah, you want me to repeat my question? Hello?
Yes, please. Yes, please.
Yeah, so my next question was on some understanding I wanted on the terms of the contract between Jindal Drilling and its JVs with respect to rig hire charges. How are they determined? How are the operating costs divided between Jindal Drilling and its JVs? Some understanding here.
So the rig owner gets rental from Jindal Drilling. Jindal Drilling operates the rig with ONGC and Jindal Drilling bears all the operational costs. Rental, however, is also borne by Jindal Drilling and it is paid to the rig owner.
Okay. So basically, in the books of the JV, there would not be any operating costs or employee costs which would be booked there. Everything would be booked in Jindal Drilling's books, right?
Almost all expenses are booked in books of Jindal Drilling because Jindal Drilling operates the rig with ONGC. However, in the books of the rig owner, there would be insurance and certain other administrative and depreciation expenses.
Got it. Okay. And when if I was referring to our annual report, where a line item comes as drilling operating expenses. So what are the constituents of these expenses?
I don't understand. Could you clarify?
So, in our operating expenses in our annual report, there is a line item by the name drilling operation expenses.
Yes.
So, what are the constituents of these expenses?
Crew salary, crew travel, accommodation, stores and spares. All of this would comprise operational expenses and employee benefit expenses.
Okay. And when we say that our uptime performance or utilization was 99.1% or 98%, how is this calculated? Based, if you could give an understanding here.
It is calculated on the hours on which the rig operates with ONGC. So out of a 24-hour period, if 98% of the time the rig is operating, then that is 98% efficiency.
Okay, so this would exclude any lag period between two contracts or when it goes for refurbishment, etc., right?
Yes, because refurbishment exercises are undertaken after conclusion of the contract on which the rig is operating.
Okay. And one last question.
Shivan, sir,
I think you've asked.
Okay, I'll come back in the queue.
Okay. The next question is from the line of Pritesh Chheda from Lucky Investment. Please go ahead.
Yeah, hi. So a few clarifications. One, the Discovery rig was a part of this quarter fully in the standalone numbers?
Discovery was deployed in May 2023.
Which means it was there for full quarter. This particular quarter, it was there for 3 months.
Pritesh, there is significant disturbance in your line. We cannot hear you very well.
Hello? Is it clear?
Yes.
So which means that it was available for the full 3 months in this quarter.
Pritesh, sir, your line has lots of disturbance. Can you please come back in the queue? The next question is from the line of Dheeraj S. from Roha Asset. Please go ahead.
I just wanted to know the rental cost has also gone up or getting revised, just like the charter rates are, for the 3 rigs that we have taken on rent or lease.
Yeah, with the revenue increase, the expenses has also increased, which is almost spanning every expenses, including employees, spare parts, refurbishment costs, everything.
So what could be the average rental going forward? Because you've given the big rates, that's the revenue side of the story, but on the cost side, what will be the rental cost going forward? Will it be a commensurate increase? Just wanted to know that directionally.
We don't want to comment on rental. What is there has already been disclosed.
Yeah, fine. On the operating number of days, can we assume that all the 5 rigs will operate 365 days?
98%.
Okay. Thank you so much.
At least 98%.
If it's not if still the contract is there.
Fine. Thank you so much and all the best.
Thank you. The next question is from the line of Aditya Singh from Robo Capital. Please go ahead.
Hi, thank you again. Can you please share the refurbishment expense that we might do on Supreme once it gets dehired?
I mean, we can't share it's still under...
No, we just want to understand a ballpark number. We don't have any idea like how much refurbishment expense do we do on rigs. So we just need a ballpark number.
It really depends. It's very different from rig to rig. Once it goes under refurbishment is what we get to know.
Okay, so Virtue has been deployed recently. Can you share its refurbishment expense?
No.
All right, fine.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Saket Kapoor from Kapoor & Co. Please go ahead.
Namaskar, sir, and thank you for the opportunity. Earlier, in one of the ONGC's notification, they mentioned about age of the fleet also being a criteria for which the rates would be set in. So, what's the average age of our fleet, and how do there's a differentiation on the charter rates?
So, There is no difference as such in the charter rates. We do get points. There are technical points given to each rig. Jindal Supreme is only one of the only rigs which is built in the 1980s, 75-80s. Rest, all of the rigs are new. Discovery being built in 2008, towards 2008, Star 13, Explorer 14. So these are all new jackups. There's a very minute difference between the prices in case there is a new rig and an old rig. So the technical marks, it's about $5,000 to $6,000 depending upon how new or how old your rig is.
$5,000 to $6,000 on the total amount. So suppose 80,000 on a charter rate of 80,000, 5,000 is what is attributed to the age of the fleet.
Approximately, yeah. If there's an old rig which was bid with Virtue, the technical scores would bring it down by about $5,000 to $6,000.
Okay. Sir, when we look at the consolidated numbers and come below the line item for share of equity accounted in JV, there are losses on Q-on-Q basis, 8 crore and now this quarter again closer to 9 crore. So if you could explain the nature of the sale.
The loss is on account of depreciation. The depreciation charge is high in one of the joint ventures. That will gradually reduce. It is a non-cash item. It does not impact the cash EPS of the company.
Right, sir. So when we look at the revenue model wherein we have owned and rented, if you could explain us the benefit of owning 49% in Virtue and Discovery and not 51, if you could explain that and what's the significant advantage of the rented and owning the assets in terms of earning in the profitability from per rig?
The reason why we have 49% joint venture is a strategic reason, and we would not want to discuss that on the call. However, the reason why rigs were initially bought in the joint venture was the ability to raise finance at low cost at that point in time.
Right. Correct. And so there is one leak. Yeah.
So just so that you're able to appreciate this point better, one new jackup rig, the kind that we have, if one is to go and buy and order one and get it delivered in the next 2 years, they'll have to pay at least $250 million today. That is the replacement, that is the cost of a new jackup rig with specifications like the ones that we have. Out of the 5 rigs that are being operated by us, the most expensive rig is Jindal Explorer. It was manufactured at a capital cost of $220 million. So that is the quality of our fleet and a reason why ONGC is very happy with our operations and one of the reasons why we are able to maintain high levels of efficiency in operations, in addition to our ability to retain and nurture good manpower.
And this is the same Explorer, Jindal Explorer, but that is being owned by MSL.
Yes.
Okay, and there the cost of acquisition was around $100 million, if
Yes. So Jindal Explorer was manufactured at a cost of $220 million at the peak of the crude oil cycle in 2014. Thereafter, crude oil cycle crashed and it was sold at a lower rate.
Okay, and sir, what should be the current replacement cost? Any ballpark number since the market is strong and there is lesser availability of rigs?
Since there are no rigs for sale and the only option as such is a new rig to be built, which Kaushal just told you would be about $250 million, and it would take you more than 2.5 years to build one.
Okay. Last point is on the ONGC legal case, sir. Any update on the same, sir?
The matter is sub judice, and it has been sub judice for quite some time. We would not like to discuss that. Correct. Because it's sub judice.
Correct, sir. Sir, the last point is on the business model of the rig business, and my understanding is that we don't have pure play rig company listed. So if you could explain, can investors look at it as an annuity type business, and only the forex fluctuations are the ones that would lead to the vagaries or the cyclicalities of the numbers? Are these the only factors? Because the cost and the income component are fixed over a period of time. So are there any other variables that we need to keep in mind while modeling out the numbers for the entity as a whole?
The contracts that we have with ONGC are firm contracts. So irrespective of changes in the crude oil market, once the contract has been awarded and the rig starts operations in the said contract, there are no changes in the day rates.
The current participant line has been disconnected, sir.
Okay.
Ladies and gentlemen, as there are no further questions, I now hand the conference over to Mr. Vikas Singh for closing comments.
On behalf of Phillip Capital, I would like to thank Jindal Drilling Management to give us the opportunity to host this call for. Now I hand over the dash to Kaushal for any closing remark.
Thank you, Vikas. Thank you for organizing this call for us. We appreciate your support. We also appreciate support of our shareholders who have stayed with us in difficult times. We have been working continuously even during difficult times to improve operations of the company, and we are hopeful that the results will start getting reflected from next quarter onwards. I would also like to thank MD sir for taking time out to join us on this call and would request him to give his closing comments as well. Thank you.
Good afternoon and thank you to everybody. It was a pleasure to speak to you all, and we hope the company does well. It's promising. The market is looking very good, and we definitely do hope to add more rigs to our fleet, provided there are contracts by ONGC and we're able to identify some more. So thank you all once again, and look forward to such calls again in the future.
Thank you, sir. On behalf of Phillip Capital India Private Limited, that concludes the conference call. Thank you for joining us, and you may now disconnect your lines.
Thank you.